If you're in the market to buy a home, are you better off waiting for home prices to fall or interest rates to drop? Hi, this is Andrew with the S2 Real Estate team here in Frisco, Texas. And my business partner, Troy, and I have been getting a lot of calls the past couple of weeks from buyers really wondering what to do. There's a great deal of uncertainty out there. Obviously, the real estate market is shifting, and it's shifting quickly, much faster than anyone had predicted just a few months ago. And that's happening for a couple of reasons. The primary reason is what's happened with mortgage rates. Mortgage rates have shot up. They've jumped substantially higher than people thought they would, much faster. So with that in mind, there's a number of buyers out there where the option to buy is just off the table, which is unfortunate because the only other option is rent. And rent isn't exactly going down. It's ridiculously expensive right now. But on the flip side of that, you've got other buyers that have just kind of pumped the brakes. They're unsure of what to do. They're like, oh, okay, well, everything's changing. I'm not seeing bidding wars. I'm not seeing the multiple offer scenarios. So I'm starting to see a few more price reductions. So I'm going to go ahead and wait for prices to drop before I go ahead and make the decision to buy. So the question I wanted to address with you today is that the best thing to do? And again, everyone's situation will be unique and different, but I just want to provide a couple of quick insights for you here. Now, if you've seen any of the videos I've put out before talking about mortgage rates and affordability, you might recall or remember that when interest rates, mortgage rates go up 1%, your affordability drops by about 10%. So what does that mean? So let's say you were pre-approved for a mortgage at 3% mortgage rate up to about 500,000. Okay. Well, let's say those mortgage rates go from 3% to 4%. With everything else remaining the same, your affordability just dropped from 500,000 to 450. That's that 1% to 10% correlation. So in the market that we're in right now, what's better for you? Which is the best option for you to do? And it can be a tough decision. I understand that because you are starting to see price reductions. So right now, the thought process may be, well, I'm going to wait for home prices to fall and then I'm going to buy. But you can't look at it in just that way. You have to take into consideration what mortgage rates are doing. Now, mortgage rates did come down over the past couple of weeks, but now they've also moved back up due to the economic uncertainty out there. There's talk that the Fed, based on the latest inflation numbers, may actually raise the benchmark rate a full percentage point. Now understand, when the Fed raises the benchmark rate, that doesn't directly impact mortgages. That doesn't mean mortgage rates jump 1%. 30-year fixed rate mortgages are more closely tied to the 10-year Treasury bond. And when there's economic uncertainty, more money usually goes from the stock market to the bond market, which can push the price or the cost of the Treasury bills up, therefore affecting mortgage rates. But I don't want to go too deep into that and make this confusing. But the bottom line is, we need to spin all of this around. And if you're truly still in the market, I want you to look at the opportunity that exists right now that wasn't there just a few months ago. Bidding wars aren't happening anywhere near as much, if at all, in many markets. You are no longer having to waive appraisals, to put non-refundable deposits down. You can actually negotiate with the seller. I'm starting to see a few more homes sell for less than list price. Okay, so we're starting to see that, especially here in Frisco. So with that in mind, here's an option for you. The builders are offering all kinds of incentives right now, and I'm starting to see standard home sales do the same. So rather than waiting or hoping that home prices are going to fall substantially, they're still up just over 20% year over year here in Frisco. Okay, so rather than waiting for those home prices to fall, you might be better served by asking for a seller contribution to buy down the interest rate. So remember, if the interest rate that you're approved at is 6% or the mortgage rate 6%, and you can have the seller pay a fee to lower that rate to 5%, that is the exact same thing as you getting a 10% reduction in the price of that home, but will save you a substantially more larger amount of money over the term of that mortgage. So if you're hoping for home prices to fall substantially, in order to get back to the affordability that we had in January, you're going to need home prices to fall about 30%. And there isn't an expert out there that believes that's going to happen right now. We do believe that the price of homes will come down. They will settle. But as I just mentioned, we're still at 20% year over year appreciation in Frisco. And I'm expecting that will continue to come down closer to flat. But whether or not they're going to go 30% lower than that again, that remains to be seen. And that would be a massive drop. But if interest rates tick up higher, you've offset that savings. So again, rate downs are something that you can actually get right now. And as I said, there's a whole lot more choice available in the market today than there was just a few months ago. So if you'd like more information about this or to see if that may be an option for you, please don't hesitate to reach out. Give Troy or I a call. You can reach us at 469-296-5230, or feel free to send an email to contact@s2realestateteam.com.